got 30 minutes left here. Stocks a little bit softer than when we started the show. Kevin Green joins us to look at some options flow. All right, nice little rhyme there, KG. Good afternoon, sir. What are we looking at here?
Well, we did see a little bit of a development when it came to the open interest, so that's actually nice to see. We actually saw some rolling up from the 5550 calls yesterday up into the 5600 calls. So we've been just continuing to see this stair-stepping activity taking place, and right now we are seeing a little bit of resistance at 5550. We kind of talked about this yesterday. There's a lot more activity. There's a lot more flows or dealer pressure at those levels. In particular, 5550 up to 5585 or so is where we're going to have some trouble. Now, if we break through 55.85, then it probably is going to be clear sailing to 5,600 here, Oliver. On the downside, once again, I mean, we don't see a lot of movement. 5,500 is always going to be on our radar here until we can actually fully break up another 75 points to the upside. And then 5,400 is a negative gamma level. We're not seeing puts really rolling up, not a lot of put activity in general here. So I think overall, this is a really good market. We talked about it yesterday. We're at a point where we want to be able to like have a little bit of compression, right? We're out of that negative gamma territory. We're in positive gamma territory. We have compressed markets right now. Grind it higher here a little bit, and that's going to be a win for us. Be able to prove these levels can hold.
Kind of seems like if you were to write it in a book exactly as you'd want it to go down, that's the way it's gone down this week, right? Like every level that we rolled up to on the call side, we eventually reached. It was just kind of this stepwise sort of magnetism, higher, higher, higher.
Yeah. Yeah, actually, pretty much every open, we actually broke through positive gamma. I think today is actually the first one where we did not open above that dealer pressure level to the upside, really creating these short squeezes that were taking place here. And that's also probably complementing the price action that we've seen today, which is, it's been decent, but I'm already hearing people saying, oh man, this is a boring market because we're only up 10 points today. This is actually a good and healthy sign that we are able to either to at least sustain these levels here. One thing that I kind of want to highlight just from a volatility standpoint, and I know we'll talk about going into the close here. From a volatility standpoint, we're still at a scenario where it's actually relatively cheap on a seasonal basis. So even if we continue to see the VIX going to maybe a 13 or even a 12 handle, that's kind of out of the norm if you're looking over the last 20 years or so. And if you're looking at the S&P 500 options expiring on Friday of next week, where we had Jackson Hole, which could be a risk, Oliver, they're not that expensive. If you look at it, it's only around a 0.5% of notational value. The implied move right there, if you actually bought the straddle, is about 1.5%, give or take a couple of percent. So it's actually relatively cheap. So the reason why I bring this up, we don't provide any advice to anybody, right? But we bring it up because before we saw that vol spike last week, no one wanted to hedge. And now you kind of actually have a little bit of an opportunity going against the seasonal trends of volatility to see maybe some cheap hedging opportunities that might be available for traders if they so choose. And so I wanted to just kind of highlight that the yellow bar there, that's sitting between 13 to 14. If we get to that, I would say that would be really outside of the norm, or more like a 2 standard deviation move outside of the norm for this type of, for August and September when it comes to volatility, or at least the VIX.
Yeah, it kind of fits with the time frame we were looking at with Sam Stovall at the top of the show, too, kind of pre-election wise. That's going to be really important. Nature of vol kind of coming back in and, keeping that perspective, as you mentioned, that, when we blew up, folks are, okay, oh, I wish I, owned vol, or I wish I was hedged. And, it came back down so fast that it seems we should kind of remember that mindset that, when you are at 65, okay, maybe that's an aberration, but whatever was under the surface, did it completely go away to the point we're going to go down to like VIX 13? I mean, because it looks like that's like what it's trying to do right now, and I'm not sure that makes a lot of sense.
I'm right there with you. Actually, I'm a little bit surprised that we actually cracked the 16 level to the downside here. So yes, it does appear that the market's really not concerned about volatility.
Month-long average, right, is still like we're now almost on the lower side of the month-long average.
Yeah, and if you kind of look at that trend, so starting from now going out into the end of September, and I hate using percentages when it comes to the VIX, but you do see around an 18 to 20% increase in volatility just for the VIX itself over that time frame. And so once again, we're outside of that band right now. Now we had a massive ramp up, we had a massive ramp down. I think it's actually the quickest removal of vol in the markets that I know that I've seen, and I believe on record, if I'm not mistaken. So we just wanted to kind of highlight that we're actually seeing pretty cheap volatility. If you look at those the at the money SPXs for Friday of next week, they're going for like 33, 35 points. Once again, not a recommendation, but just to kind of highlight 35 points on a put. We were doing 90 point and 120 point days pretty much every single day this week. So just some perspective there to see what that value is.
Yeah, that's where today is kind of like, in many ways, sort of the best outcome, to have a more calm day, really just crush the VIX and hold on, to the gains that we made. As far as volume pickup, the other stuff you've been watching, KG, did any of that come to fruition?
For volume here today, Oliver, it's actually very light. It's probably the lightest volume that I've seen on an OPEX this year alone. I mean, the top contracts last time that I checked was sitting at around 50,000, maybe have cracked the 50,000 level for the top contracts for expiring today. That's not a lot. Compare that to yesterday and the day before, where we were reaching 65, 75,000 for the top traded contract. That being said, are we looking for a melt up or melt down? I know that's your favorite question. With that light of volume, it just doesn't seem like you're going to have that massive gamma squeeze to the upside or downside. In fact, we're kind of looking a little bit weak, really rejecting off of this 55-60 area right now. But we did see them call buyers getting into the 55-60s, selling the 55-70 call spread, and then put sellers selling the 55-60. So they want to see a ramp, but I'm not sure if we just have enough volume to be able to push those dealers to be able to get there. If not, we have that balance area sitting a little bit lower than where we're at right now. 55.42 is going to be your balance area for today, meaning that would be pretty much your dealer net neutral spot.
Got it. All right. Love it. Helpful. Seems like most likely we kind of have a compressing close rather than like in a big expansion, big blowout. All right. We'll see you at the bell. Thank you, Kevin Green. Excellent analysis of the options flow and the positioning this week, of course, over the past week, giving us the levels to look for. And we've been pretty much grinding to each one we've been laying out every day. So good eyes, Kevin Green.